Hi and good afternoon. So today we'll continue our review on the performance of the stocks markets in 2025. Today we'll be looking at the performance of the US stock markets in 2025. So the overall performance of the US stock markets last year, the S&P did a summary of 16 to 18% last year. It was around 18%. The Nasdaq gave a return of 20%, around 20%. The Dow Jones was around 15% last year. The S&P is the top 500 companies of the US stock markets, so by market capitalization. The Nasdaq is the tech-heavy exchange, so all the technological stocks are here. So that did around 20%. Dow Jones, which is the manufacturers and industrial index, that did around 15%. So you can see that compared to what we saw in Nigeria last year, this is quite moderate performance. But then the US stock market offers the edge against currency fluctuation and devaluation, which emerging markets usually, participants or citizens like us usually need, just for safety. So we participate in it to get an upside and also to edge against currency devaluation and currency fluctuation. Top performing sectors, technology, obviously. Technology has been taking the lead for a while. Technology has actually been taking the lead for a while, but it's understandable. I think a cheap cheat code is look in your house. If you want to trade the US stock market, look at your house, look at your offices. What electronics or what technological devices do you use and which company makes it? I have an Apple phone. Buy Apple. You're into gaming, buy Nvidia. It's really sometimes it's really that simple. It can be that simple. A lot of people are always like AI boss, but when you look at it, the companies that are into AI, the Meta, the Apple, you realize that most of these things are not going to go anywhere, whether AI bust or not. I don't know if you're going to stop using your social media apps, whether it's LinkedIn for where Microsoft will come in, or whether it's Instagram is not going to go out just yet. Maybe TikTok will try it first, but Instagram is still going to be on for a while. So if you buy Meta, that it still got some life in it. You buy Microsoft, hey, are you going to exit LinkedIn anytime soon? I don't see the Apple crave ever going out, so buying Apple will still always be relevant. So technological stocks topped. Then there was industrials, followed by communication services, financials, utilities, then lastly energy. Energy has been lagging, maybe because of the fall in crude oil price, with the people moving to cleaner energies, EVs competing for several powered vehicles, renewable energy being used as a source of electricity. That sector has to evolve, is evolving. So even if energy is going to still remain relevant, it's just people that are pivoting to the cleaner, newer source of energy. When mega companies begin to take stake there, then we'll begin to see performance again in the energy sector. For now, in the last 5 years, crude oil has dropped in price from over 140 to like 60 something per barrel, $60 something per barrel. So it doesn't really boost much confidence for investors. Now, usually when you want to buy the US stock market, one thing we tell you about it is if you're fresh, I will just say buy the Mark 7. So the Mac 7 is Meta, that's Facebook, Alphabet, that's Google, Amazon, everybody knows Amazon, yep, Tesla, the EV giant, Apple, Microsoft, Nvidia, all the crave about AI, Nvidia with the semiconductors and the chips, so how did they perform? The number one in the Magnificent Seven, the number one leader was Alphabet, 65%. Now, Alphabet started really not so nice. The US stock market took a hit in April because the President Trump, you know, when they say the American dream, all of us that go up, we always want the American dream. That's what was inculcated into our head. America was always like the utopia for we in emerging country. So to see a bit of some of the things that are happening of recent, you're like, wow, that dream or that narrative is changing so fast. With the tariff issue that the current president was actually ditching out. What happened was a lot of stock took a hit. That was in April because of the tariff. The tariff would increase price and probably increase inflation and probably reduce sales. That fear led to a downward pull in the US stock market. It later revived towards some later parts of the years, and we saw significant gain, but that was later sorted out. But now it's again we're hearing about the tariff, so hopefully we will. I don't know. The good thing is that so long as the earth is still existing and these countries are still existing, I always feel such things will sort out themselves. So ain't nobody losing sleep over such things, really. I ain't losing sleep over such things. Yeah. The stock market has come to stay, and so Alphabet was the best performer of the Mac 7 at 65%. It means that if you had put $1,000, 65% of 1,000, 1, 2, 3, that would be $650. You'd have gotten $650, and if you had put money at the beginning of the year on Alphabet. Now the Alphabet thing is because Alphabet is the parent company for Google, YouTube, and is also is actually edging towards AI. Gemini is a competition for your ChatGPT, and they just started monetizing it. Why ChatGPT, Sam Altman is still looking at how to monetize, because really at the end of the day, investors are in it to make money. So if they ain't saying that the company is going to be sustainable in terms of revenue, a lot of them will pull back on buying such stocks. So that was how Alphabet rise when they got their own new chip and they monetize the Gemini app. So they started making revenue out of AI, which investors love. So the stock skyrocketed. Actually, I've been waiting for I had it last year. I bought, I sold. I've been waiting for a pullback to get in, but it's been like 3 months consistently, and Alphabet, it's not taking a break anytime soon. As to whether I don't intend to enter at this peak, but Alphabet is a good company. I think they are good companies. Anytime you buy them, you might be able. And Alphabet in the foreseeable future, because of the AI and all, is still going to be relevant. So you are still going to be seeing those upsides. So I do not believe it's a bad time to buy if you want to. But if you're buying at this peak, you should be looking at a 2-3 years before recovery of your fund, not an immediate. But if you want like a 1 year, 6 months, if you want to buy a stock and hold for a 1 year, 6 months, you probably want to wait for a pullback because it's actually at a very high price now. I haven't bought, and I've been trying to get in. Nvidia, the chip maker, the AI crave with them, that did 39%. Microsoft 15%. That's so even in the Mac 7, some did excellently well. some so didn't do so well. Meta did 13%, Tesla did 11%, Apple did 9%, Amazon did 5%. A lot of people say, but these are really meager results. But the thing with this is that when the market took a hit in April, people that bought in April would definitely have made more than this. But it's comparing the price at January till the end December. So there was a massive pullback in April that a lot of people took advantage of, and then that cost increase. So really, if you're somebody that you are into stock, you always look for opportunities like that when there's a massive pullback. If you have the money, that's why they say cash is a position, because you always want, those are the best times to enter. That's the funny thing, that's the beautiful thing about this US stock market. When the market is undergoing crisis, that's one of the best times to invest. Actually, people position for maybe 6 months, 1 year returns that it will recover, especially in companies like this that they are not going anywhere. I don't know about you, but I do not imagine a world where I will not use phone. Sorry, but no, I'm definitely going to be using my phone for a while, so yeah. So buying an Apple stock, Alphabets. Even when you pick the Mark 7, another thing you should look at companies that do multiple services. When you look at Alphabet, you look at search, they are there as Google. You look at YouTube, with their ad revenue. In Nigeria, Nollywood has slowly pivoted from cinemas and streaming site and Netflix Prime even into YouTube. Now, most times when I want to watch a Nigerian movie, I don't even bother looking at it on Netflix. I just go to YouTube. So when you see, Alphabet is definitely a big one. Metal, yeah. Metal, I don't know why investors are really taking a hit on Meta. I feel it's a good company. I just don't know why the stocks are always taking a hit. Apple, the reason why Apple has not done excellently well, the investors expect them to do more with their AI. I think they promised something about improving on the serial service using AI, but they weren't able to do that last year. This year, they are partnering with Alphabet to see how that will come out. So yeah, if you see Apple at a good time to enter, you might also want to enter. I think the price right now is around 260, which is not bad. I think it's below its 1 month average price, moving average price. So yeah, you might want to. I'm still waiting for it to pull back a bit before I get. I don't have free cash anyway, but when I have free cash, Apple, if it pulls back a bit, might be one of the things I would buy. So in the Mark 7 too, you have to be careful now, because knowledge has increased. A lot of retail investors have entered the market, so people are pivoting from not just the Mark 7 even to the smaller names. So Microsoft will have contractors that they work with. Are these contractors listed in public companies? Are there listed public companies in the NYSE? Why people go here is that it's the same thing we said in Nigeria. Why people buy low cost stock. If you buy, the market cap of Nvidia currently is 5 trillion. Okay, hit 5 trillion. It's like 4.5 now. Now, if you want to move Nvidia market cap, or you want to move it by like 20%, from 5 trillion, 20% of 5 trillion, it's more difficult to achieve than to achieve 20% of a stock like Micron, whose market cap is probably not up to I don't know Micron market cap, but Micron AMD still plays a part in the AI sector. Do you get? So they are also like small mid cap companies in that sector, medium capitalization by classification, in terms of the valuation of the entire stock in the stock market. So they are mid cap. So because of that, you might want to look at stocks like that, because when those stocks return, when Nvidia goes up, those stocks will, most times anything that has to do with AI boost will affect the sectors. So smaller players or mid cap players too will also see growth. And so if you buy Nvidia and you always also buy something like AMT, you would see that as Nvidia is going up or Broadcom is going up, you would also going higher, you would also be seeing a more significant increase in stocks like AMT and Micron as compared to Nvidia. So if I were to pull up, I think it's in the in this stuff. If I were to pull up Micron's return, or Micron's return or AMD return for the year, you'll be surprised at how the returns it was. It will be amazing. So you also want to look at stocks like that. You also need to now start thinking of pivoting. Have the Magnificent Seven. Normally you can look for the ones that are more, it's like Nigeria. When you're in Nigeria, if you're a business person or you run a retail store, for you to survive normally, you will sell more than one things. So you see pharmacies that and double as grocery stores. There are pharmacies where they double as supermarkets, and that's because of the economy that we are in. And we see that a small pharmacy would look, what do all my neighbors need? Instead of them to be going out, I can double my store as a supermarket and meet their needs. I'm close to them, so it's easier for me to meet them than for them to go to ShopRite. So they will have like constant customer. I used to live in a place where I had a pharmacy like that. There are some things that I just take off my mind because I know the pharmacy will always have. It's the same thing when you look at the Mark 7. Look for people that are in different sectors. If you look at the Alphabet, you see that Alphabet is in different sectors. Even the current AI wave, they're also there. So it makes it, that this is a strong company that even if one sector is not doing well, they can see revenue from the other end. So that's a good one to pick from them. Nvidia currently into chips, but they are the crave of the moment, so you probably want to tap into them because they are the crave of the moment. Microsoft is another solid one. That's where the problem comes in, whether because of knowledge or understanding. There are some solid stocks in the market that people don't touch, and one of them is Microsoft. Microsoft is also a stock that is also into different things, and you'll be wondering that why has the stock not been doing well? But I don't know. But Microsoft hasn't been doing so well, but Alphabet has been good. Apple, because of the news and expectation for cereal, might also do well this year. You might want to look into it. Amazon is another one in different sector. The logistics sector, they're also in video streaming sectors. So all these things, when a company has multiple streams of income, it's just like we as individuals that we are teaching ourselves that have multiple streams of income. When you see companies too that have multiple streams of revenue, they are solid companies you want to buy. Now the idea is that they might not also be doing magnificent results like 1000, but you are sure, number one, safety with stocks like this, because they are not going anywhere. Because of that, they are assured of continuous returns and performance in their results. So when the initial AI, because there will be a lot of traders that want to come into the market is sweet now, everybody will come in. But when things become very difficult and things like tariff comes, when the market face issues, a lot of traders like that are speculators, they will be sieved out of the market. So stocks that they were benefiting from, which was giving them 1000, might pull down, and so because of that, some of all the stocks might never come up. But you see stocks like this, they are stocks that long time owners, people that are long time investors in the stock market, they are always in stocks like this. Even if there's a temporary setback, whenever their result comes out and people see that these companies are doing good and are doing well, people go back to those stocks. So that's the essence of stocks like this. So if you are not very experienced and you want to do this for long term, say 5 to 10 years, where do I save my money in the next 5 to 10 years? Magnificent 7 stocks are actually good stocks to buy. Semiconductors leader, the AI crave. That's where this is coming from. And I was talking about Micron. I told you that Micron is part of the people, the AI crave, that don't just look at Mark 7, look at contractors or other smaller or mid-cap players in their sector. Why? Because when you see an increase in any of the Mark 7 leaders, you would also see an increase in other players in that sector. And if you do meet cap, it's easy for 2 naira to turn to 4 naira, or $2 to go to $4, than for $160 to go to $320. So it's easy to get double your returns on this. But it doesn't mean, you should get to strong fundamental companies in also the sector, not just any one of the companies in the sector. You want to do strong fundamental companies in the sector, because AMD is also another one in the semiconductor leader and the chip and AI sector. Micron did 160 to almost 240%. I'll get the exact return. I can't get the exact return, So that's magnificent compared to Nvidia that did 13%. They are both in the same sector. Nvidia Broadcom is the leader, but you see smaller players, the mid-cap players that are also in that sector. You can see they are also doing well. So you can also expose yourself when you're buying to at least get a little bit of upside on that end. That's it. Especially if you're working and you have a stable source of income and you're investing regularly. These are things you think about when you want to distribute your portfolio. I am for energy. Sorry, I've tried to do financials, I've tried to do industrial, I've tried to do consumer staples, I've tried to do e-commerce. I don't get that vibe. So I think they give me moderate returns, and I feel that their investments in Nigeria that give me those moderate returns with less risks. So if I'm going to get moderate returns from a sector, I'd rather use alternative investments in Nigeria to get that are more safer or more risk-free or lower risks to get those moderate returns than go into those sectors. So for me, most times in the US stock market, I'm into the technological sector, the AI bull.
If you found this video interesting and will like to learn more, contact us on Instagram at Magda Premier Innovations Limited or WhatsApp at 0816 029 7117.